Hello traders and welcome to another weekend's market forecast video. So hopefully everybody is having a great weekend. So let's see what we have for the upcoming week. Very straight to the point and quickly here. With the dollar index as expected, we started and continued the move lower. So the market is still in the downside. So potentially soon we might get some consolidation, but then we should continue to the downside. There are many different variations this can play out. So this is just, as you know, the general bias of the market that we share with these market forecast videos. So if you want more detailed analysis and what we can see in other markets as well, you can join us with the link in the description so you can get a better understanding of the overall market trends. For the dollar yen, as expected, the market reacted to the downside over the last 2 weeks, as we have been expecting. And now we are actually into what we can see a consolidation right here. So the bigger picture, we should still remain sideways to lower. But of course, this pair, as we said before, it might not be worth looking for any trading opportunities. And this is one thing that we provide as well into our membership service. We will always let you know when something is worth trading or not, because at the end of the day, you do not want to take risks in markets which they don't have any direction, because that way you don't have enough volatility to make anything out of it. So if you want to get proper understanding, once again, feel free to join us with the link in the description. But if you are trading this pair, the general bias we can see is sideways to lower for the time being. Euro dollar also, we expected the market to start moving to the upside after the ending structure right here. So what we can expect in the coming week, it might be some consolidation. Of course, we must not forget that we will have certain events like the FOMC during Wednesday. So this can create some choppiness and volatility in the market for daytime frame weeks up and down. So we would not be surprised if the market consolidates before it goes higher later on. So this is something you have to keep in mind entering into the next week. But regardless, the overall picture is still a move to the upside, which is unfolding at the moment from the 13th of January 2025. For the pound, same idea, pound dollar, we expected the reaction to the upside to start taking place. So more upside we should see in the near future in the pair. So short term, entering the week, we might soon get into a consolidation stage before another push to the upside. So keep that in mind again, as we have explained. But the overall bias is still to the upside. We can easily retest the 128 area. And we'll see from there. But so far, the market is showing to us that it should continue to the upside for the time being. Now, for gold, as expected, throughout the end of the year, we have been biased to the upside. We have been explaining that from this pullback, we will see a move to the upside. That's exactly what the market is doing. More than about $200 to the upside so far. So we should see more continuation. Possibilities for the short term, the market might create here a possible flat correction before it moves to the upside, so keep that in mind. The buying areas were lower, so at the moment it's in a stage in which the market can create some sort of a range or another accumulation before more upside. So this is what we can see at the moment in gold. Eventually, we will be breaking the highs from the 30th of October for new all-time highs for gold. Now for oil, as we have expected, the market reacted lower after reaching our Fibonacci extension target area after a double correction from the 10th of September. So from here at the $80 area, we said that the market will give us a reaction. This was a critical stage for crude oil, and from here we are biased to the downside and we are bearish for oil. We could see a possible consolidation soon before more downside. This is what we can see for the time being. Of course, the key area will be the 72. If we can break lower from that, then we can say with a high confidence that oil will be able to break the lows from November, 18th of November. And this is our main bias for the market of oil for the time being. Now for gas, we have reached the $4 area that we expected to reach, and from here the market is struggling, which is very normal because we have explained that this was the main target area, and at the moment the market is waiting whether there will be more buying pressure to continue higher. So far it's intact, the ascending price action from December, but we can easily also create a double correction to get more buyers before we move to the upside. And these are the risks of natural gas in the short term. But so far the trend can still remain higher for the near future. We can easily spend another week into consolidation, like we have mentioned from this high on the 13th of January, that we can spend a week or two into a consolidation stage. So overall picture here is mixed. Keep that in mind for the short term in gas. S&P 500, excellent move from our Fibonacci extension area. This was the buying area we have been mentioning after the market filled in this gap. But of course, at these stages of this market, someone should question whether should be trading this one or other markets. And that is the importance of our member service and what we provide and teach to our members. We always show them which instruments they might provide us with bigger market moves than the traditional and main markets that most people trade. So for the time being, the S&P can give us some sort of consolidation here. That will be a possibility, and then it can continue to the upside eventually from there. So keep in mind any short-term volatility. This pullback can even extend more before it goes higher. So this is a market that can do these things in the short term, but the bias is still to the upside. We can see higher highs in the S&P 500 for the near future. We already made a new all-time high already this week, so more upside with any dips should be expected. And concluding our weekend's market forecast with Bitcoin, we are still consolidating here. We would not be surprised if the market provides us with a fast dip to the downside before we get another accumulation for the next move to the upside. This is something that it can happen obviously in the short term. Alternatively, this can get even choppier with more delay and sideways movement before the next move. So this is why if you are looking for short-term trading in cryptos, you are essentially gambling your money away, and you donate this money to these providers and exchanges that they give you leverage, which is actually against you. So the only way to be successful in cryptos, you have to learn when and how to enter the market in the spot and how you can exit eventually down the line. We can help you with that as well with our membership service, and of course protect you from any of the potential scams out there and all of these influencers that they want you to get in the traps that they are setting up to take your money away. So be very careful when you are dealing with cryptos, and especially with leverage. This is not how you should be dealing with this market, because it's a highly volatile market designed to wipe you out just like that. So as I said before, this is only for the people that really want to make things work for them. So the link is in the description. You can join us anytime, and feel free to send us an email at support@roiforecast.com if you have any questions. Lastly, we will be proceeding with upcoming content during this week. Last week we have been busy, so this week we will be providing some interesting videos. One of them will be about the US real estate and how the market was warning investors ahead of time. Of course, those ones that they know what they're looking for, and how we can also provide to you customized forecast according to your sector. Also, from today onwards, we will have a new service that is the one-on-one call. So you can book a call with us anytime. It's up to 1 hour. We can sit with you and talk to you about anything you want related to your own specific case about the market, trading, or if you want us to have a specific asset in demand. So you can prepare an email once you have purchased your one-on-one call with the link in the description. You will be able to send us an email and book that call and give us an explanation and description of what you would like to discuss in the call. The prices are also in the description. Also for members, it's a lower price. For if you are not a member, it's a little bit higher. So if you want that, you can check it out with the link in the description. So that's what we have for this weekend's market forecast. Hopefully you will have a great rest of your weekend, and we will see you in the next video. Take care.